The 5 best high-growth stocks to invest in. Finding equities that perform in this unpredictable climate, particularly in the high-tech sector, has been extremely difficult. High-growth companies, on the other hand, are a terrific spot to deposit a portion of your overall investment portfolio if you plan to invest over a longer length of time, say more than 3 years. Here then are 5 high-growth stocks that you should consider adding to your portfolio. Number 1. NVIDIA, ticker NVDA. Graphics processors and related software are designed, manufactured, and sold by NVIDIA Corp. Its chips are at the heart of self-driving cars, cryptocurrency, and cloud gaming. NVDA is also a major player in the data center and gaming industries. The company is a market leader in this field because of its high-performing computing and cloud businesses. The company's cloud, artificial intelligence, and gaming solutions make it distinct from its competitors in the semiconductor sector. Given the current high demand for chips and the approaching Internet of Everything, now is a fantastic time to buy NVIDIA stock. Number 2. Intuitive Surgical Inc., ticker ISRG. Intuitive Surgical is a medical device firm that focuses on the development of minimally invasive surgical technology. Intuitive Surgical, with the help of modern robotic systems, end-to-end learning, and a variety of value-added services, may be able to increase the number of successful surgeries while also reducing the amount of time patients spend in hospitals and lessening complications. Because of the vital position ISRG plays in the healthcare industry, as well as recent market movements, Intuitive Surgical has become, in our estimation, a very good buy. The groundbreaking line of Da Vinci surgical systems is arguably the cornerstone of Intuitive Surgical's success. The latest robotic surgical instruments continue the company's record of advancing minimally invasive surgery across a wide range of surgical procedures. Da Vinci surgical systems have been utilized in over 8.5 million procedures in 67 countries, making surgeries safer and far more effective. Intuitive Surgical's recent slide should allow long-term investors to accumulate shares of a great business not on company weakness, but on overall broad market weakness. Number 3. Norwegian Cruise Line Holdings Limited, ticker NCLH. Another great stock to buy right now is Norwegian Cruise Lines. The cruise line may be on the verge of a breakthrough as the industry leader in a beaten-down cruise sector and a vital part of a travel industry with unprecedented pent-up demand. The cruise ship operator has been shut down for more than 2 years, but the CDC is expected to relax regulations and the travel industry is poised to experience a record-breaking summer. Despite predictions of a coming recession, American savings balances have never been higher, and families have never been more eager to travel. Almost every other major travel company is predicting a successful year, and there's no reason to believe Norwegian won't follow suit. The bull thesis for Norwegian Cruise Line is straightforward. The stock appears to be undervalued for a company with so many positive factors working in its favor. That isn't to imply that there aren't issues. After all, the company took on a lot of debt to keep its non-performing fleet running during the pandemic. Years of headwinds have forced the Norwegian stock to plummet, and justifiably so. However, it looks like the company has withstood the worst of the storm. It is expected that losses will be reported until the fleet is fully operational. However, Norwegian will be back to full strength, barring any delays at a time when the travel sector is flourishing. When everything is said and done, Norwegian Cruise Line was one of the worst affected stocks by the pandemic. The company's entire fleet of ships was stuck for the better part of 2 years after business operations were abruptly halted. NCLH, on the other hand, accomplished more with what they had than any other cruise company. With one of the best balance sheets in the industry, Norwegian should be able to pay off its debts quickly and capitalize on a strong tourism market. This could be one of the best stocks to buy now and hold for years if all goes according to plan. Number 3. Palo Alto Networks Incorporated, ticker PANW. Palo Alto Networks is a multilingual cybersecurity company based in the United States that has built a name for itself by safeguarding the online infrastructure of some of the world's largest corporations. Palo Alto's portfolio speaks for itself, with over 77,000 customers and 95% of today's Fortune 100 organizations relying on secure services. As a result, as the demand for cybersecurity rises in the 21st century, Palo Alto Networks is the company that more and more businesses are turning to. Palo Alto Networks has already shown itself to be an excellent investment for long-term investors. The cybersecurity's firm stock has increased by more than 871% over the last decade, and it recently hit an all-time high in the first quarter of this year. Nonetheless, despite its recent performance, Palo Alto Networks remain one of the finest companies to buy right now. At the very least, the cybersecurity firm appears to be benefiting from a number of tailwinds that should help it weather today's tumultuous market. Palo Alto Networks appear to be one of the few IT firms poised to benefit from rising inflation, with some analysts anticipating as many as 9 rate hikes by the Federal Reserve over the next year or two. The majority of tech firms are projected to suffer financial losses. It's worth noting, though, that Palo Alto Networks appear to be well capable of not only surviving, but also prospering in an inflationary climate. While Palo Alto Networks isn't a cheap stock, its present pricing appears to be a steal when you examine all of the positive factors at play. As we become more reliant on the cloud, the demand for cybersecurity will only expand, and tensions in Ukraine are hastening the global adoption of cybersecurity for small and medium businesses. Number 4. CrowdStrike Holdings Incorporated, ticker CRWD. While CrowdStrike is not a household name outside of Wall Street and huge corporations, it is a name that should be on every investor's radar. If nothing else, CrowdStrike offers a critical service that is becoming increasingly useful as technology gets more embedded into our daily lives: cybersecurity. The company's ability to secure online platforms has allowed it to benefit from multiple tailwinds, the most important of which is projected to last decades, if not forever. As a result, CrowdStrike isn't just a good long-term investment, it's also one of the best. CrowdStrike is a timely opportunity for today's investors due to the unique convergence of multiple elements. The latest tech sell-off in particular has highlighted CrowdStrike's astronomically high valuation. The whole tech sector has been knocked down for the better part of 2022, with investors avoiding high-growth tech equities in favor of value plays that can survive in an inflationary environment, and CrowdStrike is no different. CrowdStrike is trading considerably below its November 52-week high due to no fault of its own. Because of the overall market mood, stocks have been under pressure over the past 6 months. That's not to say CrowdStrike wasn't ready for a drop. Even with a drop, CRWD still has a high market cap. CrowdStrike stock has a price-to-sales ratio of 32.38 times, making it one of the most expensive in the software business. There's no denying that CrowdStrike is trading at an exorbitant price, but the greatest stocks to buy in today's market typically command a premium. CrowdStrike is the industry leader in a field that is becoming increasingly significant. As illustrated by the recent transgressions in Ukraine, our reliance on the internet has raised the necessity for cybersecurity. The threat of cyber assaults is more likely than ever before as global tensions rise. Cyber attacks have recently impacted organizations of all sizes, and rising tensions between global leaders predict that the demand for cybersecurity will only increase in the coming decades. To be clear, CrowdStrike is a pricey stock, but it's currently trading for around half of what it was a few months ago. At today's price, investors have a fantastic opportunity to position themselves in one of the greatest cybersecurity firms at a time when online security is more critical than ever. Long-term investors may face some short-term volatility, but perseverance will most certainly pay off. CrowdStrike appears to be a long-term winner, with a present pricing that makes it one of the finest stocks to purchase right now. Number 5. Shopify, ticker SHOP. Shopify is a worldwide e-commerce firm based in Canada that specializes in bringing merchants and customers together on a global scale. Most importantly, Shopify lives up to its name, providing businesses of all sizes with the tools they need to succeed in an ever-expanding digital marketplace. Shopify's platform is as adaptable as it is diversified, allowing merchants to run an online store, collect payments, market goods and services, fulfill orders, and more all at the same time. Simply put, Shopify provides businesses with everything they require to conduct business online. Shopify's range of online tools will become increasingly important as the usage of e-commerce continues to rise. Shopify, which is already a household name for small businesses across the country, accounts for roughly 10% of all e-commerce sales in the US, trailing only Amazon. When you combine that figure with the reality that e-commerce accounts for only 13% of total retail sales in the United States, it's simple to understand why Shopify could be a long-term winner. As if that weren't enough, Shopify is stepping up its efforts to expand internationally. Shopify partnered with JD.com, one of China's leading e-commerce platforms. Merchants will be able to set up shop on JD's platform, utilizing Shopify's products as a result of the move. Shopify's expansion into one of the world's largest e-commerce markets allows them unrestricted flexibility, putting any concerns about revenue growth to rest. Shopify is a legitimate e-commerce industry leader. As a result, the stock has a high significant market capitalization. However, the recent price reduction makes the risk-to-reward profile much more appealing. Shopify appears to be a great buy with years of positive growth. So there you have it, 5 of the best growth stocks to buy now. Do you agree with our list? Or do you have a growth stock or two that you feel would leave our mentions in the dust? Let us know in the comments below, and don't forget to leave a like and subscribe for more great content. Until next time, happy hunting!